Hi everybody, in today's video we're going to talk about buying your first condominium unit or strata unit in Canada. Condominiums have become very popular in recent decades because they're easy to get into, they're fun to shop for, and they're really not all that hard to own. So today we're going to explore what it might look like for you if you're a first-time buyer of a condominium, and I'm going to give you a bit of insight on the industry and how they work, and I'm also going to share some of my tips with you. Okay, all right, well, let's dive into it here. So why would you buy a condo? Well, if it's your first time buying a piece of real estate, condominium units or strata units do a really great job of removing a lot of the variables in the equation of buying your first house. Okay, because you are sharing the risk across all of the other unit owners in the building, there are certain things that you just don't have to think that much about when you're buying a condo. So stuff like the building envelope, the roof, the furnace, the heating system, the parking situation, exterior maintenance, all of this is looked after by the condominium board and corporation that you're buying into, and then the professional management company that the board will hire to look after that. It also gives you, a condominium unit also gives you a lot of flexibility later on in the life cycle of real estate ownership. You may choose to move out of this condo, as most purchasers do. They don't typically stay in these units for a long time. And you could use it as a rental, or it's easier to sell these units oftentimes because they're not as expensive, and they typically have a greater turnover ratio. There's always units in buildings that are up for sale, so they're a little bit more liquid when compared to detached homes that are really specialized or unique for the family that's living in them. So lots of reasons to be interested in owning a condominium. Now, when you are an owner of them, the ownership experience is something that you have to think a little bit about before you decide to go and do this, because not only are you buying the unit that you're seeing, but you're buying into the community within the building and how it's run and how it's managed and the bylaws and all of that stuff. So because you've got often hundreds of people living within the same complex, sometimes thousands in some of these large complexes, as you can expect, there's rules and regulations for people that are living in these units and what they can and they can't do. And you need to know about that before you sign on the dotted line to buy one. Most of the bylaws from one building to another are fairly consistent. They follow the Condominium Act and the provincial regulations for managing and owning condominium units. But what you'll find is that there will often be subtle differences in terms of stuff like what can you put on your balcony? What are the rental restrictions, if any, on the condominium units inside the building that you're contemplating? What are fines for smoking, for noise violations, for parking, all of that sort of stuff. How can you use the elevator? Things like that will vary from one building to another. And the older that a building gets, oftentimes the more nuanced some of these rules can be. And so that certainly is something you need to know as you're buying into. Almost all of the condominium units that you'll see out there for sale will be professionally managed by a condominium manager. So the way that the structure works is you would be buying into it, you're a unit owner, you would have a share of the condominium corporation that owns the whole building, okay? And then all of the unit owners, they will go and vote using the power of the weighted out or the weight of their unit relative to all of the other units in the complex. You'll get the power to vote for your board. So your board would be a number of unit owners that kind of sit on like a council, and they'll be there to manage the manager that the condo board would be hiring. So that's typically a professional organization, a professional company that will collect the condominium fees from all of the owners that we'll talk about in a minute. And then they're also there to enforce the bylaws, to work with third-party vendors, exterior maintenance, roofing contractors, window washers, all of that. All of that stuff is looked after by the condominium manager, but the condominium manager is managed by the board, which is elected by all of the unit owners. So it really is kind of its own little mini community and its mini city inside a city, so to speak. And it does run like a business, albeit a non-profit business. And so you'll see financials that will come out of condominium meeting minutes where they will say, okay, here's how much money we're spending on behalf of all of the owners and how we're directing the manager to spend our money and so forth. Okay, so next up we have condo fees. We talked a little bit about this. So one of the things that turns people off of buying into a condo is, oh, I got to pay the condo fees. There's all the hundreds of dollars every month is just going away, and I don't really get to see or feel what it's going for. But if you bought a detached house, you would have bills that will show up that aren't going to be all of that different than what you're paying into the condo fee. But just that when they show up in a detached house, they're usually big ticket items. Like if you need to go and buy a roof, you might be talking $10,000 to $15,000. But in a condominium corporation, you're saving up for that roof replacement over many, many years by way of contributions to a reserve fund. And that makes up a big portion of condominium ownership, and the fees that are paid in is saving up enough money to pay for these big ticket items when they come due. And setting a schedule for how much to save and how much future expenses are going to cost is an enormously complex task that is handled by professional companies. These are construction companies, engineering companies that will be out there to assess the expected future cost of certain items and then advise the condominium manager and the board how much to start socking away and save up, so that when that bill comes due in the future, the condominium corp has saved up enough money to do so. Not easy to do, and for purchasers that are buying their first house or something, they're not thinking about that. They're not socking money away. They just deal with the expense when it comes. But in condominium units, this is budgeted for and money is saved up to look out for these big ticket items in the future. Now, these fees, though, only go one way. They only seem to get more expensive. Very, very seldom have I seen condo boards decide to charge everybody less and have less revenue coming in. So you can expect condo fees to go up over the course of ownership in your building. So should you buy an old condo or should you buy a new building? And particularly in the last few years, we've seen a lot of new condominium construction across the whole country. And new condos are cool. I mean, they got all kinds of new features, new design elements. They can look really swanky. The show centers are, adorned with these beautiful finishings, and it can just be so much fun to envision yourself, moving into one of these brand new units and what's it going to look like. And they'll have the site over there, which might be an old dingy property right now that's going to one day turn into this very glamorous condominium building like you see here. But older units tend to be in the best locations, right? I mean, the real estate doesn't change, the location doesn't change. And so developers from decades ago would probably know what the best areas in the cities are, and they would be building there. So don't rule out older buildings because you might find they're better located. New buildings, when a new condominium unit is built, the developer has certain requirements, legal requirements that they must meet before they can get permits to allow people to take possession of their units and move in. And this would be stuff like setting up the reserve fund, setting up the condo fee contributions, estimating how much they should all be. But they do this based off of modeling exercises and minimums that are sort of set forth by the municipality that the condominium unit is being built in. So there's some uncertainty there. Did the developer get it right? Are they charging the right amount of condo fees? Or might they have them set just a little bit lower so the units look more affordable so they can go and sell all of their units out, right? Old buildings don't come with that. They actually come with some history. You have a bit more sense of what you're actually buying into because they've been sitting there for many, many years, and they've had years worth of meetings and annual reports and financial statements that you can go and review. So you have a much better idea of what your ownership experience will be like coming into an older building than coming into a new one. And if there's issues with that older building, you're going to know about it. It's going to show up in the meeting minutes. People that have been living there will have been talking about it, and there will be background information for you to know about. So don't shy away from a building just because it's older. They can have higher condo fees, typically because the utility stuff in there might not be as efficient as you'd have in a newer building. And there could be additional reserve fund contributions as buildings get older and these repairs get closer and closer into the timeline of the owner of the lifespan of the building. Then the reserve funds can need to be flush with cash to handle this, and you can expect condo fees to be in line with those required contributions. And so sometimes older buildings can have more fees, but usually you get what you're paying for. Because if you're buying into a building that has a big reserve fund, you're buying into this big pot of money that's like a security blanket for your condo building to run. Unit size and layout is a really important thing to think about, because there's such a range of these things, and they can be really small little matchbook or matchbox condominium units all the way up to these multi-story penthouse units that are just glamorous and beautiful. But you need to know the bigger units are, of course, going to have a larger unit factor. That's what we call it in the industry. And because of that, they're going to pay a larger portion of the required condominium fees for the whole building, because they're bigger and there's more space in there to heat. And that's how it works inside condominiums. You can usually expect a smaller unit. So if you're looking online or you're seeing a unit and it's a smaller unit, you're going to find those are going to be on the interior walls here, where you're going to have neighbors to either side and upper and below you. And you're only going to have the windows on the one end of your unit, like you might see over here in the picture that we've got. Because you're in an interior unit, whereas the larger ones will be on an exterior wall. You might have a corner unit here and just a little bit more natural light coming in, and because they're larger, they'll be a bit more expensive. But you should also know that in the larger apartment style complexes, the unit plan that you're looking at per floor here is usually the same as you start to stack it up on top of each other and move upwards throughout the building. So it's kind of copied that way. So whether or not you're buying something on the 6th floor or the 40th floor, usually they will look the same, unless you're on the 2nd floor right above the entry level, or on one of the top floors near the very top of the building, where sometimes the developers and architects will have a little bit of fun with those larger units at the very top. But if you're in the middle of it, they all kind of look the same. And so you can ask yourself, is it worth paying that much more money to be on a higher floor or not? That's kind of up to you. Now, with respect to unit size, there's a couple things within the industry that are sort of well known and accepted by those that trade in this space, and one of them is that size never goes out of style. Okay, so if you're paying more money to get a bigger unit, you'll often be getting your money's worth, as long as you're not going overboard and buying something that's like the equivalent size of what you could get in a detached house. Okay, if you're buying something that's like 2,000 square feet or more, you might be paying more dollars you might find yourself spending a little bit more money for space that you might not actually be using all the time, unless you have a real need for a super large condo like that. So I would like to recommend that you stay between 600 and 900 square feet. And recognize that you're not going to necessarily live there that long. Most people that are in condominium units, they'll be there for a few years, and then, if they meet somebody or they want to have a family, generally they'll exit the condominium market and move out to the suburbs where there's a little bit more room to kind of move around. Or perhaps, you're coming back into your condo because you've already owned a detached house and you want something smaller inner city, and you may find that you get bored of one building after a few years. And if you don't have to have something close to schools or close to something else, you could just move over to a different building and check something else out. So that's one of the benefits of being an owner in the condominium space, is that you can flip in and out of units on a more consistent basis, more regular basis, and usually find something else that's out there that you can buy in the community that you want to live in, and have an expectation that there will be buyers that want to live in your area too. My personal favorite floor plan and kind of size is between 650 and 750 square feet in a 2-bed, 1-bathroom plan. That will work really well for if you ever need to rent your unit out. Obviously, anybody that needs just a 1-bedroom unit, they will take a 2-bedroom if it's within their budget. But anybody that needs 2 bedrooms, they're not going to look at a 1-bedroom. And so having 2 bedrooms with a minimum of that 1-bathroom plan kind of ticks the boxes of having a 2-bedroom unit. And kind of caters to the widest range without having 2 bathrooms in there and more square feet than you really need, which could make it harder for you to get the rental income that you need to cash flow your unit if you decide to keep your property, your condo, and become a landlord after you decide to move out. Other things to look for You want a building that's got modest turnover within it. So you don't want something where no units are selling at all, right? And some realtors will market their units like that. Oh, nothing's ever been, for sale here. Nothing's ever sold. If you got something that's had a lot of units on the market that maybe haven't traded, that can be an indication that there could be some issues with the condo board itself if units are languishing there, or the condo corporation. But ideally, there's some turnover there, and you can see here's one building I grabbed from Calgary that's got a couple active listings and lots of recent sales in there. That's kind of what you want to see, and you want to be able to see people that are commanding good pricing, and ideally pricing that's coming up and not coming down. If pricing is starting to come down in condo buildings, it could be because if somebody's buying into it, they might have to be ready to make contributions to a top up to the reserve fund, or if there's a special assessment or something like that and a black cloud over this building, you can see prices kind of languish and maybe more listings on the market relative to sales. So those are some of the things to look at, and you really do need to look at it building by building, not just looking at your unit and then other units that are in the same area that are for sale. You want to go into the sales history for that actual building so you know what you're looking at. The other thing would be being close to transit or shopping. That's a big part of multifamily condominium lifestyle, is to not necessarily need a car to go to where you want to go. So to be able to use transit or walk to shopping, that type of thing, is really important for condominium or strata lifestyle. And so I think you want to make sure you're getting a unit that can happen. And then also, this is actually the same if you're looking at a detached property compared to a condominium property, is what you see from the outside is usually a pretty good indication of how things are working behind the scenes, okay? So if you've got an older building with lots of deferred maintenance on the outside, it's probably a sign that there's not enough money to go around to fix all of that stuff up and also improve stuff on the inside. Could be elevators, it could be parkade issues, it could be something with the heating or cooling systems. Those things might not be getting the money that they need if the exterior is giving you clues that it looks a little dingy and a little bit rough. And so if you're seeing signs of older buildings that are nicely renovated and have had upgrades, that's what you want to see. That's a good call or a good sign. And also know that if your condominium unit that you're contemplating has got like a pool in it, or a fancy gym, or a multi-purpose room, or a media room or something, you're going to be paying for all of that with the larger condo fees in order to afford the condo corp to afford all those amenities. And then lastly, parking and storage is extremely valuable. It might not seem like it's that important when you're buying it if you don't have a car or if you don't need a lot of stuff. But remember, when you go to sell that unit, if you have parking and you have storage, you're going to open up the range of buyers that could come in and purchase your unit from you. So they do have a lot of value, and don't overlook them so quickly. Due diligence items here, okay, so this is like what you need to be thinking about before you buy something. And the first one is to get the condominium documents reviewed. Okay, the condominium documents are going to have stuff in there like this balance sheet. They're going to talk about the condominium fees. They're going to tell you about, the situation with the parkade maintenance and, the utility room, and all that stuff is going to be in there. And if you've never, like even me, I mean, I've got almost 2 decades worth of experience. I've owned a pile of condos and managed hundreds of them. I find there's always something interesting inside the condominium documents that maybe I haven't seen before. Even if there's not a lot of data in there, that's telling as well. So get those documents reviewed by a condominium document review agency so they can tell you everything that's in there. But you should be reading the most recent meeting minutes. So like the last few months and maybe the last annual general meetings minutes or report. Go and read that, because if you're not the type to read a whole bunch of bylaw information or dig into the financials, the minutes are like a legit conversation about what is being talked about in that unit or in your building at that time. And so if someone has an issue with the unit owner, maybe there's tenants or a Airbnb issue or something, it'll show up in those meeting minutes. And if there's a reserve fund issue or some problem with money, people will be talking about it at the meetings, and you'll be caught up as to what the latest and greatest, or item that the condo board is juggling at that time. It'll show up the meeting minutes. You can also call the condominium manager. Okay, so the condominium manager is hired by the condo board to go and oversee the operations inside the building. There's usually a staffed person there. Sometimes there'll be assistants that will be there that will be at the condominium management company. And you can often get a hold of them if you have specific questions about, say, bylaws or something about, the documents, because it'll be the condominium manager that's got to prepare the documents for you to review. So getting them on the phone to have a quick conversation if you've got specific questions about use or anything like that, oftentimes that's a really worthwhile thing for purchasers to do, to just get a little bit more info about how things are actually running inside your building by the person your condo board or group or company rather that your condo board has hired to look after it for you. You also want to look at the owners versus renters ratio. So in Alberta, this is a required disclosure on the condominium documents, is to tell you how many people in that building own it and live there as owners versus how many live there as renters. And that's an important ratio to have, because if you're going to be buying a unit as an investment property, you might like seeing that there's lots of renters in there, because other unit owners then are going to be more like you and probably more forgiving for move-ins and move-outs and short-term rentals, that type of thing. But if you're buying a unit to move into it, you might not want a whole pile of tenants in there and all the turnover and all the move-ins and move-outs and just the ownership experience of being in a unit where people are only living there for a short time. That might not be what you want. So trying to find out what that ratio is like, because it's going to be different for every building depending on price point. And each purchaser, for their reasons, will have a different a different preference for overall makeup inside the condominium for renters versus owners. And then the last one here is the condominium insurance policy and the deductible. In the last few years, as we've had all of these, crazy weather events and natural disasters and stuff the world over, condominiums have been hit hard by this, and the insurers are not wanting to dole out big settlements that make repairs and fix stuff up. And so they're charging a lot more money to condo boards for insurance, and they're also increasing the deductibles that condominium units have to pay. And I'll share a personal story about a unit that I've owned in Kelowna in British Columbia, where the condo board had set the deductible at $250,000, $250,000. And if it was deemed that there was an issue that was caused by an individual unit owner, it was in the bylaws that they will go after that unit owner for the deductible for the corporation. Okay, that would mean that if something happened in your unit, say you've got a tenant that leaves something on, or there's a fire or something like that inside your unit, then they would come after you, the unit owner, to pay that deductible. Okay, now you as an individual owner can of course get insurance to pay for the deductible. There's always ways to work around that, but if you don't read and don't do your due diligence, that might be an unfortunate surprise that I don't think anybody would want. The other thing is to use a professional. Okay, if you're going to go buying something like this, there's a lot of moving parts to a condominium. They can seem really easy to buy. They're affordable. They got condo corps there to deal with a lot of the stuff. But you need to understand what it is that you're looking for and what the bylaws are going to be like and what the experience of owning a unit like that will be like. And also, are you buying into something where the condo board and the incorporation is run in a responsible way? And it takes a special type of realtor to know this space, and especially know one building to another. If you're using a generalist, they'll know about the condo rules and all of that, but they may not know about how one building is compared to another, or if there's history in a specific building, they may not be able to relay that to you. So using a professional that specializes in condos is really important, as is getting their reviews the documents reviewed by a professional document review agency is also super important, because they're going to know what to look for and you're not. They do this all the time. It's their business. They're going to read the fine print and tell you, is there a lawsuit that's happening against the condominium corporation, or are they suing the developer for not having fulfilled the developer's obligations, and now you're going to be buying into that drama, right? So using a professional condominium document review agency to summarize everything within the documents for you is just a really great practice to have, and well worth a few $100s when you're buying a unit that could be $500,000 or more. And then using a mortgage broker to finance the purchase. So the reason I say this is that, even if you're coming in and you're paying cash for a unit, consulting with a mortgage broker that could perhaps look to see if there's any, history within that building, right? And one of the elements I'll give you an example of in Alberta were post-tension cables for buildings that were built with these cables that would be under tension to kind of keep all the concrete and everything smushed in together and stable. Well, if those cables were not maintained properly, they could lead to significant issues with foundations, and if water is getting in there later, it created huge problems for a number of buildings in Alberta, to the point where CMHC said, hey, look, we're not going to insure any units in this building. And so if you were a first-time buyer and you got your 5% down payment and you're going to go buy this unit and you come in with no conditions on it, and then you find out CMHC won't actually insure that building, and you got to go and find another 15% to get to 20% down, and now you're in real trouble. If you're using a pro mortgage broker, they can find out if any of these buildings have been flagged by CMHC for the wrong reasons and why CMHC may not want to insure those units. That's always really good to have. And so if you need a pro, that is what I am here for. Feel free to visit my website and sign up if I can get you a referral to an awesome realtor to help you buy a condo in the city that you're looking at. If you found this video here to be valuable, it would be awesome if you could give me a like. And if you'd like more Canadian real estate content designed for entrepreneurs and those that are passionate about real estate in our fine country, then please subscribe to my channel. Thanks very much for watching, guys, and we'll see you next video.